Good evening, everyone. I'd like to welcome members, officers, and members of the public watching at home to this Finance, Audit and Risk Committee. This committee plays an important role in the overall governance of the Council. Good governance has many benefits, including helping the Council to make effective decisions, improve performance, and be able to respond to risks and opportunities. Can I invite the committee member and scrutiny officer to explain how proceedings will work and confirm that officers in remote attendance are present?
Can I confirm the following officers can hear and be heard? Georgina Chapman.
Present.
Thank you. Sarah Kingsley.
Good evening, present.
Thank you very much. Debbie Hanson.
Yes, present, thank you.
And Jessica Hargreaves. We'll come back to Jessica in just one moment. If a member wishes to speak, they should use the speak button located on the microphone unit. Please wait for the chair's invitation before you begin. When requested to vote, voting will be via the yes, no, abstain buttons on your microphone unit. Details of how members voted will be shown on the screens around the room, and the results will be visible on the YouTube stream. In the event of a tied vote, the chair will have the casting votes. Are there any questions before we start? Okay, can I just confirm that Jessica Hargreaves is online, please, and can hear? Okay, we'll come back to that one shortly. Over to you, Chair.
Thank you very much. Apologies for absence. I have received apologies for absence from Councillors Tina Bartwas and Ruth Brown. Having given due notice, Councillor Bartwas will be substituted by Councillor Daniel Wright-Mason. Are there any further apologies? Move on to item number 2, minutes 13th of March 2024. For the purposes of clarification, as the question is sometimes raised, the minutes of the previous meeting can be moved and seconded by members who were not present at the meeting, although it is preferable that those who were not present should abstain from voting and commenting on the motion. I'd like to propose that we take as read and approve as a true record the minutes of the meeting held on 13th of March 2024. Could I please have a seconder? Yep, that's fine. Thank you, Councillor. As none of the members here were present, I guess there won't be any comments on the minutes. Chanel, in terms of the vote then, do we just take it by acclaim rather than vote?
We would like it to go through and they can abstain from it.
Okay, brilliant. In which case, can we move to the vote then, please?
Chair, that motion's carried.
Thank you very much. Notification of other business. There's been no other business notified this evening. Chair's announcements. In accordance with council policy, this meeting is being recorded and the recording will be available to view on ModGov or via the NHDC YouTube channel. Members are reminded to make declarations of interest before an item. The detailed reminder about this and speaking rights is set out under Chair's announcements on the agenda. For the purposes of clarification, 4.8.23a of the Constitution does not apply to this meeting. Therefore, a member may leave the room during the debate and consideration of that item and be able to vote. However, please be mindful of the business on the agenda and wherever possible, leave at an appropriate point in the proceedings. And just to note, I've agreed to change the order of the published agenda. So item 12 will now be taken following item 5. Item number 5 is public participation We have no public participation this evening. So, in which case, could we please move on to item 12 in the agenda, please? This is It's in the correct order on the paper, isn't it? Right, so the item is Finance, Audit and Risk Committee Annual Report 2023-24. I'll hand over to Ian Cooper to present.
Thank you, Chair. The broad purpose of this report is to provide Council with a report on how FAR has performed over the last year and to give them assurance that you are performing your role effectively. What I'm going to do, and the reason we moved it up the agenda, is because it describes what's happened last year and what's happened this year. As a few new members tonight, I'm going to use it as an excuse to kind of talk through what the committee is doing and make sure you're kind of on board with what we're going to do over the next year and know where we're going with it all. I'm going to jump around the report a little bit. There will be a logic to what I'm doing, but I will start with on page 183 of the reports pack. In there's a reference to main achievements from last year. And the paragraph starts by saying how we managed to approve the statement of accounts 21-22, and then references the report in March 24 on the external audit backlog, just to set out some of the context of that, because it will crop up in the next few reports. There is a backlog in external audit for a number of reasons. The main ones being that with the both failures, I guess, in private and public sector of certain organisations, the rules and regulations around audit and the Financial Reporting Council, which sets those rules, have been strengthened. That means there's more work for external auditors to do in looking at public sector accounts and council accounts. There are also resourcing issues widely across both the audit firms and also to an extent in the councils in the preparation of those accounts. That latter one doesn't apply to us. We've got quite a stable team, but does apply more widely, and therefore that has created a backlog which is made worse by the COVID pandemic and the issues that faced their interest trying to audit at that time. So it got bad, and we are 1 year behind in our statement of accounts, and other councils are even further behind, in often 3 or 4 years behind in some cases. And there was therefore a proposal to do something about that because that was sort of unsustainable. There's limited value to having statements of accounts that are outstanding by that long. They're part of the control mechanism to make sure your kind of accounts are right and your money's accounted for correctly. So the proposal was that all the key bodies work together to put in place a backstop, which would mean that for all years up to 22-23, that the accounts would all be approved by the end of September, as in the September coming up in sort of 3 months' time, even if the audit work hadn't been completed, basically create a clean slate and get back a bit more on track. And then following that, there'd be a series of further backstop dates to then catch up properly. Part of that being that if you've got a year where you haven't done the full audit work on the accounts, you need to catch up because you can't then, as an audit firm, rely on the work of the previous auditor. You have to go back and do lots more work yourself to kind of catch up a bit more, but not as much work as doing the full audit for the previous years. So that was due to happen, and there was due to be legislation being taken through Parliament, and then a general election was called, which therefore put a stop to that legislation passed through Parliament, and so therefore that is now uncertain. So that's the kind of context that the next two reports, you get one from Ernst & Young and then one from KPMG, they're reporting to you in, is that why they kind of seem so far behind where they should be. And that also leads into, if I refer to the table on page 184 of your pack, so there'll be some delays in the dates in there. So whereas that sets out for September 24, the 22-23 audit report being considered by the committee, that now won't be September. That'll be after that. I'm not quite sure when yet, but after that date. And that will also mean that the 23-24 audit report will be probably in that, hopefully in that little blob I put between December, January and March, but there is a little bit of risk. It could be later than that, but hopefully still in that kind of time frame. What we're also going to do is, rather than the annual governance statement being in September 24, that final document approval, we'll link that into statement of accounts as well. So that will also be later. So what I propose to do is, when we take support to council, I'll make an amendment to that table to reflect when those dates will actually happen, if you agree to that as part of the considering of support. What also that table on page 184 also does is it presents to you what you've got coming up this year. So this is what you've got to look forward to. So just as kind of very briefly to run through it, you as a committee are responsible for approving the statement of accounts and all the reports linked to that. So that includes the annual governance statement and all the reports from our auditors in relation to that. For the years up to 22-23, our auditors were Ernst & Young, and for the years in 23-24 onwards, our auditors will be KPMG. That's part of the kind of a regular cycle of changing auditors every sort of 5 years. So nothing to be concerned about having the change of auditors, but that's why you've got 2 different audit firms getting involved. But I guess once Ernst & Young completes the 22-23 work, you'll just hear from KPMG going forward. In addition to that, other control mechanisms that you consider a committee are internal audit. You set the audit plan at the end of each year, and then you monitor the report for the progress against that plan during the year. Internal audit is a management function that is looking at the way that controls work in the organisation and making sure they're effective and providing that kind of independent viewpoint on those. You get reports from the shared anti-fraud service, the shared service hosted by County Council, as is the shared internal audit service, also hosted by them, covering districts and the County Council. And the shared anti-fraud service is there to investigate, prevent, and try and detect fraud. They receive reports both from staff and from members of the public on areas that people are concerned about where there might be fraud, and investigate those using their very specialist staff and access to certain databases and information. So that's part of their role, is doing that sort of that investigation role, but also there also to act as a prevention role as well. So as officers get lots of reports and they're about things to look out for and concerns that may arise to help prevent fraud happening in the first place. You then also, working down that table, have a key role in supporting cabinet with all the kind of financial reports and the risk reports. So those reports you'll see first, and then provide information to cabinet or kind of your perspective on those. Again, your focus is on the kind of the how are things done, how well the control's working, and that perspective on them to try and give that insight into cabinet to give assurance that those reports are robust. And then linked to that is the budget setting reports as well. So towards the end of the this calendar year and into the beginning of the next calendar year, you'll look at reports around looking at our budget, both from a kind of medium-term perspective and then looking at next year's budget and setting that. So that's kind of the story across the year. The other purpose of this report is to kind of present what's happened in the previous year, which is set out in the report. And there's another table there looking at the kind of the various things that happened in the previous year. Quite similar in terms of the things to be considered, but slightly different dates in some places. And you'll also note that in page 180 and 181, there was a peer support review of this committee. We've made a number of recommendations, and in the bullet points there, it sets out the mechanisms, the actions to be put in place as a result of that. Again, to hopefully provide assurance to council that this committee is doing the right thing, because we've had the review and they've put in place those actions to make sure that we're being as strong as we can. So that's the kind of the background. The report is that of the chair of the committee, so it's in Councillor Nolan's name, and that's my introduction to it. I guess back to Councillor Nolan for anything he wants to add in terms of introducing it.
Thank you very much, Ian. I think really for me, it's just to thank our internal and external auditors for the work they've been doing. More from them later on, so I won't spend too much time there now. To the officers for their support, the training they've given us, and for keeping, especially me, in track and functioning as part of this committee. In terms of previous members, obviously there has been a lot of turnover, particularly to Claire Billing, who served for a number of years on this committee, still with the council, but has now left this particular committee. And 2 of our former members, Terry Tyler, who was vice chair and chair quite recently, and Terry Hone, who served on the committee for a number of years. My thanks especially to them. I don't think there's anything else I want to add right now, but I'll open up to any further questions that committee members may have on the report. Councillor Ward.
Oh, thank you. And I echo all the hard work in and appreciate it. Just one question to the service director. You were talking about the extra work on the backlog of the audits. Does that have any implications in terms of budgeting for your team or external costs that we need to factor into the budgets, and has that been taken into account?
The total impact in terms of total workload on my team is relatively unchanged. It just affects the timing of it. And sometimes that's a bit annoying in terms of things happening at different times as opposed to. So whereas usually you do your audit and then move on to budget setting, sometimes you've got budget setting and audit at the same time. Not perfect, but we dealt with it. In terms of cost, as we'll see when we get into the revenue monitor report, there is a line there about external audit costs. So external audit costs have increased to reflect the additional requirements of the Financial Reporting Council and the additional work that goes into the audits. The fees are set by an independent body called the Public Sector Audit Appointments. So they review the amount of work that goes into audits and sets fees based on that. So it's not just the audit firm saying we want more money. There is a level of scrutiny going on there, and it does affect additional work that's involved. That's the impact on the base fee. There is an as yet unknown impact on what fees will be for the completion of the 2022-23 audit work, because that will not be a full audit if it progresses as is planned. It'll be a limited scope audit, so less work involved overall. But I don't know what the impact of fees will be on that yet. That'll be for the PSAA, that organisation, to determine. But then the counter to that is that there'll be more work to be done by our new auditors in catching up compared to being able to rely on the 22-23 audit that should have been done. So the fees in future years might be increased compared to what they might have been otherwise.
Thank you. Any further questions from the committee? If not, the recommendations are that the committee consider and comment on the annual reports of the Finance, Audit and Risk Committee as attached at Appendix A. I think then with the changes to be made to that table on page 184, that Finance, Audit and Risk Committee recommend to the full council that the annual report of the Finance, Audit and Risk Committee be noted. Could I please have a proposer? Thank you, Councillor Willoughby. And a seconder. Councillor Ward, thank you. Is there any debate? If not, could we please move to the vote?
Chair, the motion's carried.
Thank you very much. So now we move back in the minutes to item 6. This is the Value for Money Interim Report 22-23. Debbie Hanson to present.
Thank you, Chair. Before taking you through the report, it's probably worth just reflecting on a couple of the points that Ian made in his introductory comments in relation to item 12. So this is our report on our work that we've done to date in relation to the Council's value for money arrangements for the financial year 2022-23. The report is noted as interim because we can't actually fully conclude our value for money work and issue our final reporting until we've actually issued our opinion on the financial statements. As Ian has already said, that opinion is likely to be a modified opinion, and that's because the proposals at the moment are that we move to basically not undertaking audit work on the 22-23 financial statements, but instead issuing what we would call a disclaimer of opinion. And that disclaimer would be because of the fact we haven't completed the audit because of the statutory backstops that are likely to be put in place. So it's not a disclaimer that's got any negative reflection on the council in terms of saying you couldn't provide information to support the audit. It's saying that's basically the disclaimer is because of the statutory legislation that's been put in place to clear the audit backlog. So I think that context is just important. So at the point we are able to issue some form of audit opinion, we will finalise our value for money commentary and issue that in our auditor's annual report. Having said that, I don't think our commentary is likely to change significantly, but we are required to update it up to the point we issue that final reporting. So if I then just take you through the key messages of the report, we're required under the NAO code to consider 3 key areas in terms of value for money arrangements. So those 3 areas are financial sustainability, the council's governance arrangement to make appropriate decisions and risk management, etc. And then also the council's arrangements to deliver economy, efficiency and effectiveness in the use of resources. As part of our risk assessment processes, we identify whether we find any significant risks of significant weakness. We did not identify any, and having completed our work, we are satisfied that the council's arrangements are adequate across all those areas and the sub-areas we have to look at. And therefore, we wouldn't be proposing any modification to our audit report in relation to value for money arrangements. Just to draw out, I think, a few of the key elements that are summarised in the report. In relation to financial sustainability, the council consistently sets a balanced budget and delivers to that. It also has a good track record of delivering savings. However, there are significant challenges facing the council, as they're all local authorities, and therefore it's important the council continues to focus on delivery of savings that are planned to bridge any budget gaps. We also noted that the reserves are being maintained at an appropriate level, so they're above the level that are recommended by the Section 151 officer. But also the Section 151 officer has been very clear in reporting that where there is reliance on reserves, and there has been some limited reliance, that can only be done in a short-term basis because reserves can only be used once. Therefore, that's not a sustainable strategy. So I think that just supports the fact that it's very important that the council continues to focus on identification and achievement of savings to bridge future budget gaps. In relation to governance, I think Ian has already mentioned the peer review, and there was also an internal audit review which highlighted some areas for improvement in terms of the council's committees, and there's been various actions including training that's been undertaken to strengthen those arrangements. Internal audit also provide a reasonable assurance opinion on the 22-23 controls, governance frameworks, etc. that the council has in place. We also undertook some limited procedures on the 22-23 financial statements. So we checked that they complied with disclosure requirements. They also checked that they casted appropriately. And we also checked that the council had been undertaking cash and bank reconciliations, which is a key control. And we were satisfied with all of those arrangements. We have noted one point in the report for the council to consider, and that's in relation to the accounting treatment for the Churchgate Centre, which the council purchased during the year. The council has currently classified that as an investment property. The code requirements for investment property is that they should be held solely for capital appreciation or income generation. Reading the reports that support the purchase of the Churchgate Centre, and they seem to be linked very much to regeneration. Therefore, we're asking the council just to have a look at that and to consider whether that's an appropriate classification and valuation. That is a technical accounting area, so it doesn't raise any concerns in relation to any broader governance issues. Finally, in relation to arrangements for economy, efficiency and effectiveness, we note that the council has performance indicators in place which are routinely reported and monitored. There are also procurement arrangements in place, and the council enters into a number of partnership working arrangements with other local bodies. Therefore, we're satisfied, as I've said, that the arrangements are adequate for 2022-23, and we will conclude our reporting on that at the point when we're able to issue some form of audit opinion. I'm very happy to take any questions or comments on the report, but hopefully it's fairly self-explanatory. Thank you, Chair.
Thank you very much, Debbie. Are there any questions from the committee on the report at all? Just to check, Ian, do you have any comments to make? Anything from your end?
Just to confirm, we will look at the classification of that Churchgate Shopping Centre. We'll talk to KPMG, who will be our new auditors, to assume we have the same view as Ernst & Young, so and then we'll look to change that as appropriate.
Thank you very much. John Cannon.
Thanks, Chair. Just a quick loop back to the previous meeting for EY and Debbie Hanson. Thanks ever so much for answering my question about the duration of the going concern conclusion that you reached, and so much as it lasts for 12 months from the date of the audit report. You answered the question last time, and I never actually said thank you at the time, so I do remember that, and it's great to see it in the minutes. Much appreciated. Just on that Churchgate classification, I would think that as an asset, the carrying value is the carrying value regardless of how it's classified. But just for the record, can someone clarify, please, whether a reclassification would change the value that we're carrying that in the accounts? Thanks.
Don't know whether Ian wants to answer that, or whether, I mean, from my perspective, a change in the classification of type of an asset can drive a different valuation, because there are different valuation bases for depending on assets, but it does depend on the specific valuation basis that's been applied to that property, which we haven't looked at. So it may be that it has no impact on the book value in the accounts, but as I said, we haven't looked at it in detail. All we've noted is the classification of it, which, as we've said, needs to be considered. But Ian may have more detail on the basis of the actual valuation.
Yeah, at the moment, we would use a professional valuer to value our investment properties, and the valuation of that would be linked to basically the income stream it generates, and the valuation on that basis. If we were to reclassify it as basically as property, plant and equipment, we may take a different view as to the valuation basis of that. Then you're into the realms of kind of taking the actual cost and maybe depreciating that over time. I don't think it'll have a substantial impact on the valuation of it, but we will look to do that, rectify that if we are going to change it, to do that as quickly as possible, so we can both change the 22-23 accounts whilst they're still basically in draft format, and then also change it appropriately to the 23-24 accounts as well, so they're consistent. But it's something we're going to look into within the next couple of weeks.
Councillor Wright Mason, did that answer your question? No, that's great. If there are no further questions at this point, the recommendation is that the value for money interim report 22-23 be noted. Can I please have a proposer? Councillor Wright Mason, thank you. And a seconder as well, please. Councillor Willoughby, thank you very much. Is there any debate from the committee at all? Nope. In which case then, can we please move to the vote?
Chair, that motion's carried.
Thank you very much. Again, thank you very much, Debbie, for the presentation there and answering questions.
Thank you, Chair.
We'll now move on to item 7, which is the Audit Plan 23-24, KPMG. Jessica Hargreaves to present.
Thank you, Chair. So as you've said, we have in the pack our audit plan for the 23-24 financial year, which will be the first year that KPMG undertakes the council's external audit. As has already been alluded to and talked about already, we are not able to start our audit of the 23-24 financial statements through our substantive testing until the prior year audit has been concluded, but we have been able to undertake a significant volume of planning and risk assessment work, which means as soon as that audit opinion is signed for the prior year, we're able to progress and start our 23-24 audit as quickly as possible. I'll take the paper as read, but I'll talk you through some key highlights within the audit plan document. On page 41 of the pack, page 3 of our audit plan, we've highlighted here the materiality levels that we will be working to as part of our audit. From a materiality point of view, we've set a threshold of £1.85 million, which has been calculated as 3% of the council's forecasted expenditure for the financial year. What that means is any audit differences that we identify at a value above that threshold, we will require the council to change those following discussion and debate on those. We have set a triviality threshold of £92,500. That's calculated as 5% of our materiality threshold. What that means is any difference that we identify during the course of our audit above that level, we will report to the audit committee within our year-end audit reporting. If I take you to page 43 of the pack, that's page 5 of our audit plan. We've highlighted here the significant risks that we've identified for our audit. We have identified 4 significant risks for the 23-24 financial year. The first one is in relation to the valuation of land and buildings. We consider this to be a significant risk because there is a significant area of estimation and assumptions that go into that valuation. And the council engages an external third party to support them in the valuation process. So our work here focuses on understanding what the assumptions and the methodology underpinning those valuations are and the data supporting that as well. The second significant risk area is in relation to the valuation of investment properties. As you've just heard, investment properties are can be valued on a slightly different basis. There are a different set of assumptions that underpin those valuations. So again, as part of our audit procedures, we make sure that we're satisfied with the classification of those assets as well as the methodology for their valuation. The third significant risk area is the management override of controls. Now, this is a significant risk that we're required to recognise on all of our audits, regardless of the sector that we're working within. Our audit procedures here focus around journal entries that the council has posted within their general ledger system to ensure that they're relevant and appropriate and that there is no management override of controls or perhaps any fraudulent activity being undertaken through the manipulation of journal entries. And the fourth significant risk that we've identified is in relation to the valuation of the pension scheme. Again, this is an area with a lot of estimation and judgment involved, and a third party is engaged to support the council in the valuation of that. So again, our audit procedures here focus around what are those assumptions, what is driving them, and to make sure we consider that they're relevant and appropriate, as well as the data underpinning them in relation to the personnel within the pension scheme. It's then going to take you through to page 50 of the audit plan, of the pack, that's page 12 of our audit plan. Auditing standards do expect on every audit that we consider the risk of fraudulent revenue recognition. What we've highlighted here is that during our audit, we have determined to rebut that fraudulent revenue recognition risk for the council's financial statements. This is due to the nature of the revenue. We don't consider there to be an incentive or an opportunity to manipulate the revenue figures as there might be in, say, a private company organisation. On page 54 of the pack, page 16 of our audit plan, we've highlighted here our approach to the value for money work that we will be undertaking. So as you've just heard, alongside our financial statements audit, we will also be issuing an opinion in respect to the council's arrangements to secure value for money. The domains and the regulation that we work to is consistent to what you have just heard from Ernst & Young, but our methodology may differ slightly. And on page 55, we have outlined our methodology and our approach. And again, this is a piece of work that we are hoping to complete over the summer period, as we are able to start working on this ahead of starting on our financial statements year-end audit. Within the appendices of the report, we've provided an overview of the key members of the council's audit team, as well as the timetable. As Ian's mentioned earlier in the meeting, the timetable is slightly up for negotiation at the minute due to the change in the due to the legislation not going through as initially intended because of the general election. But as soon as we know the results on that and the impact on the backstop dates, we'll be working very closely with Ian to agree that timeline. But we've all committed to getting this 23-24 financial statements audit completed as soon as possible to support the council getting back on track and into a normal cycle for their external audits. The final thing that I'm required to do at this time of year is to confirm our independence for the delivery of this year's audit, and I'm happy to confirm that. We have noted within the confirmation of independence section of our report, page 61 of the pack, that alongside the delivery of the financial statements audit, the council has asked that KPMG also undertake a housing benefit grant certification. That's an annual certification that the council is required to undertake. They're not required to engage your external auditors for that piece of work, although many councils do so. We're currently just in the process of contracting with the council in relation to that piece of work, and the amounts paid in relation to that work will be fully disclosed within both the financial statements and within our updated audit plan and ISA 260 document. The final thing to just highlight here is that you will see that the plan is detailed as being in draft. That is because there is some guidance that's currently out for consultation, and we will need to consider the outcome of that consultation on our audit plan. And once we've done that, we'll be able to issue a final version of this document. Happy to take any questions.
Thank you very much, Jessica. I just have one myself, just probably for interest more than anything else. The entity materiality measure, is that an accounting standard that 3% is taken from?
Yes, there's a benchmark range that we're expected to be within, and the 3% is within that allowable range.
Thank you very much. Are there any questions from the committee? If there are no questions, then the recommendation is that the audit plan 23-24 be noted. Can I please have a proposer? Thank you. And could I have a seconder? Councillor Ward, thank you very much. Is there any debate from the committee? If not, could we please move to the vote?
Chair, that motion is carried.
Thank you very much. And thank you, Jessica, for the presentation.
Thank you.
We'll now move on to item 8. This is the SIAS Annual Assurance Statement and Internal Audit Annual Report 2023-24. Chris Wood to present.
Thank you, Chair. Excuse me, I'm still suffering from hay fever and I've had a scratchy throat all day. But I thought I'd better introduce myself first formally, although you've had an email from me with a host of internal audit reports attached to it. But my name's Chris Wood, as it says on the label in front. I'm the Head of Assurance at Hertfordshire County Council, and the Shared Internal Audit Service, and indeed the Shared Anti-Fraud Service, which you heard Ian mention, come under my broader remit. And it's through my broader remit of looking after the Shared Internal Audit Service that I also work with North Herts as your Head of Internal Audit, or as the Internal Audit Standards grandly call me, your Chief Audit Executive. Not a title I'm particularly fond of, but it's in the standards. I usually do training on all the things that's in this report for audit committees, and there's quite a lot in here that's buried in the public sector internal audit standards, soon to be overtaken by the global internal audit standards, which is another training session in itself for you to look forward to if you choose to have it. First thing I wanted to bring to your attention is, as your Head of Internal Audit, I produce an annual assurance opinion for you every year.
That's based on the internal audit plan of work that this committee approved in each March. We then deliver that plan. Each individual audit has an opinion in it, which you may have seen if you open my email with a glut of internal audit reports. And at the end of the year, we produce an overall assurance opinion based on that work. And this report confirms to you that we've given reasonable overall assurance on your control, risk management, and governance arrangements. The report goes on to sort of detail and summarize the results of all our audit work in the year. The majority of the opinions were reasonable. You've got 3 high or limited assurance reports in there, which I've referenced, as well as 3 high priority recommendations. But on their own, they don't reduce your overall opinion. You've got a broad cross-section of audits across the council, which came up with reasonable assurance, and that supports my overall opinion. This authority also has a very strong culture around implementing its high priority recommendations. I report on those to you during the course of the year, and there's a table in the report which outlines that all those that were reported in year have been implemented, and that also supports my opinion. There are councils who don't have a particularly strong culture around implementing their recommendations, and that's where good audit committees come in and holding officers to account for implementing those. That's buried in the audit committee guidance, and one of the things that audit committees can do to sort of strengthen internal audit. But I'm pleased to say that that's not a particular problem here. Couple of other things I need to do in this report, required by the standards to do so, so please bear with me. One of them, as with the external auditors, is to confirm our independence to you. We don't believe we've been subject to any scope and resource limitations or inappropriate limitations. So I confirm that to you, but you've been asked on the cover of the report to seek management assurance that the scope and resources for internal audit were not subject to inappropriate limitations in 23-24. And at this point, I usually ask your Service Director for Resources and 151 officer to confirm to the meeting that that is the case, and if that could be minuted accordingly.
I can confirm that is the case. We seek to ensure that SIAS have access to whatever they want to have access to, and encourage them to look in the areas that are areas of concern to get maximum value out of what they do.
Thank you, Ian. That also gave me a pause to have a bit of water. Another thing that I need to confirm to you in the standards is that we do a self-assessment against the public sector internal audit standards. And the results of our self-assessment were that we generally conform, which is a lovely phrase, but it's the top category for compliance with the public sector internal audit standards. You may very well say that, of course, you'd assess yourself in the top category. And that's why the standards mandate that at least once every 5 years you have an external quality assessment, and somebody comes along, a suitably qualified person, and provides that independent assessment. In between those external reviews, we have to self-assess every year. And as a result of the last external assessment, we were generally conforms. You'll have noticed in the report, and again, the standards require me to do this, so keep bearing with me. There are 2 deliberate non-conformances that we report to you, and we have to report where we don't comply with the standards. And those 2 are because of our particular shared service arrangements across multiple authorities, mean that those particular areas of non-conformance just don't work for us as a shared service. We've carried those 2 areas of non-compliance to all the audit committees we go to for as long as the public sector internal audit standards and ourselves have been around. They are not new areas of non-conformance, but we do report them every year as obliged. And finally, the last bit, and an action for the committee is to approve our internal audit charter, which is in the appendices. That's our constitution that sets out our rights and responsibilities. The reason the audit committee approves it and owns it as part of your role in good governance is to support internal audit and support our ability to conduct our work and report that work to you. It also gives a profile to us and to the audit committee in your support of us. So it's a requirement that you approve that. It's normally prepared in accordance with public sector internal audit standards, but the global internal audit standards I mentioned earlier came into effect, they come into effect in January 25 in general, but for the public sector next April. But we're being encouraged to work through them and implement them now ahead of that implementation date. And one of the first things we've done in terms of those new standards is prepare the audit charter accordingly. So that's just some information for you. But I will stop talking now. And if there are any questions on the report, I will happily answer them.
Thank you very much, Chris. Are there any questions at all from the committee? Councillor Ward.
Yeah. Thank you. That's very clear. Just one question about the when there's recommendations for management, you're talking about the implementation of them. Good to hear about the hygiene here. When you said it's implemented, is that implemented? Not just management have said it's implemented, but it's been your team has assured that it's been implemented.
Sorry, lights come on now. That is management assuring you in a public forum that they've done it. So they've accounted to you that those recommendations have been implemented. We do periodically revisit those audit areas, and then we will confirm on an evidence basis that those have been done. We have not re-audited in those particular areas. So those particular ones, management are giving you assurance in a public report that they've done those things, and that's how the accountability, I guess, is given to you. But we do include those areas in future audits, and we revisit them within our audit plans if it's deemed necessary. Are
there any further questions from the committee for Chris? If not, then the recommendations are note the annual assurance statement and internal audit annual report. Note the results of the self-assessment required by the Public Service Internal Audit Standards and the Quality Assurance and Improvement Programme. Approve the SIAS Audit Charter for 2024-25. Seek management assurance that the scope and resources for internal audit were not subject to inappropriate limitations in 2023-24, which I believe we've now had minuted. Could I please have a proposer? Thank you. And could I have a seconder, please? Councillor Wright Mason, thank you very much. Is there any debate from the committee at all on this item? If not, then could we please move to the vote?
Chair, that motion's carried.
Thank you very much. Thank you, Chris. Move on to item number 9, which is Draft Annual Governance Statement 2023-24. Georgina Chapman to present.
Thank you. Good evening. Yeah, so we've got the draft annual governance statement for 2023 to 2024, which includes an action plan for the year 2024 to 2025. It's a requirement for the council to conduct an annual review of the effectiveness of its governance and its internal controls, and then to produce an AGS. And FAR committee is the legal body that has responsibility for approval of the AGS. So reporting the draft AGS and the action plan to the committee at this stage gives the committee the chance to comment, and for us to kind of take those comments into consideration before we bring the final version back to the committee for approval. A copy of the draft has also been sent to the Shared Internal Audit Service and the Shared Anti-Fraud Service and the external auditors, KPMG. So they'll also have the chance to comment on it before we bring the final version. The draft AGS is prepared following a review and scoring of the effectiveness of the governance and the internal controls by the leadership team. And that review is based on our local code of governance. And the local code of governance for 2024 came to the committee in March of this year. And it outlines various principles A to G, that we then conduct the review against. So there's various kind of themes. So there's commitment to ethical values, transparency, openness, developing capacity, managing risk, those sorts of things. And that local code is itself based on the Sit for Solace framework, which is the Delivering Good Governance in Local Government Framework, the 2016 edition. So as Ian mentioned earlier, the final version will come back when we've got the statement of accounts for 2023 to 24 ready, and that's based on some recent Sit for guidance. So it will be a while before the final version comes back, but we will start on the action plan in the meantime, because otherwise there won't be a huge amount of time left in 2024 to 2025 to finish the action plan. So the draft AGS is at Appendix A, and the leadership team AGS self-assessment document will go onto the corporate governance webpage when we've received all the comments. So if I just spin through a couple of the themes in the action plan. So there's a few actions around monitoring the success of the member induction programme following the 2024 local elections. There's an action around evaluating officer uptake of essential training and trying to increase uptake where the completion rates are below 75%. There's an action around improving oversight of the cybersecurity risks and developing controls or actions to limit our exposure there. An action around the budget hub and opportunities for residents to engage via that platform. Looking forward to the upcoming corporate peer challenge, there's an action around developing and implementing an action plan to respond to the recommendations that will come out of that. There's some actions as well around social value from the procurement process. So sharing information and developing processes for collecting the social value that's been committed. And also developing reporting on the social value so that it can be provided as part of performance reporting. And then there's finally an action around reviewing the organisational structure following the adoption of the council plan for the new 4-year administration. So those are our kind of key areas for action for 24-25. And I'm happy to take any questions if anyone has any questions. Oh, and I should just say that the review didn't find any significant governance issues. And the leadership team self-assessment document proposes an assurance level of substantial. Thank you.
Thank you, Georgina. Are there any questions from the committee on the report? I do have one. I reckon it's probably getting into detail a little bit, but it's under the Information Commissioner's Office section. I think it's on page 8 of your report. It was underneath whether it states number of reviews. That says that there was one ICO case. I was just wondering if you could describe what that might be, because it seems to be a little bit separate from the others.
I don't know what the case was. I can find out for you and get back to you on what that was about.
Yeah, if you could, that would just
a long version of this is the kind of condensed.
Yes, yeah,
yeah. But I'll get back to you on that. Thank you.
Right, thank you very much. Any other questions at all from the committee? John Cannon.
Thanks. Useful update. Thank you. Just one question, please, on Principle E on your page 5. The second bullet there says that there's a recruitment process form that's replaced the vacancy control process. I just wondered, is a new form part of governance? Is there more to it, or is there a different way of putting it? Could we say new controls have been established? It's just the reference to a form just distracts me from the bigger picture governance that the rest of the paper comments on very nicely. It's almost a stylistic thing, but I wonder if there is anything more substantial behind the word form.
I don't think there is something particularly more substantial behind the word form, so we can review the wording of that. Thank you.
All right, thanks very much.
Anything else in the committee at all? In which case, the recommendation that the committee is recommended to review and comment on the draft AGS action plan for it to be finalised for approval as soon as possible after the council's external audit has been completed. Can I please have a proposer? Thank you, Councillor Ward. And can I have a seconder? Thank you, Councillor Wright Mason. Is there any debate from the committee? If there's no debate, can we please move to the vote?
Chair, that motion's carried.
Thank you very much. And thank you very much, Georgina. Move on to item 10, revenue budget outturn 2023-24. I'll hand over to Ian Cooper to present.
Thank you, Chair. As a reminder, this is our revenue budget. This is our spend on day-to-day things, staffing, services, etc., and is distinct from the next report, which will be on capital spend, which is the spend on acquiring and improving our assets. So in that regard, this is the spend, and this is the end of year position. So this is taking the spend over a year. We do regular reviews in terms of quarterly updates on the forecast, and this is where we are at year end. All the numbers are subject to audit, so there could be some changes as a result of any audit processes as and when they happen, but not expecting any substantial changes coming out of that. Most detail is in table 4, which sets out all the various changes between what was previously forecast and where we are now, up from the end of quarter 3 to the year end. So I'm not going to go through that in detail, but have to start taking questions on all those detail on there. But I will point out that on the first page of that, third item down, there is an item there referring to audit fees, and obviously cropped up earlier around what our expectations on audit fees. And there you go, there's the additional cost of those audit fees in the revenue monitor, and with an ongoing impact as well in relation to those. So then moving through the report, scooting through sort of the next sections of it. I'm going to pick out onto page 129 of the pack. In there, we've got some of our key sources of income. We monitor those throughout the year and link those to the supporting data in terms of performance indicators and usage, to try and keep an eye on those, because those income streams will affect our revenue position. And broadly positive in terms of direction of travel and the indicators in table 6, but there are some red levels in terms of where we ended up at the end of the year in terms of the actual numbers on those where we haven't achieved the target levels of income as set in the budget. I also wanted to point out to you on page 131 of your report pack where we ended up with on the budget. So throughout the year, we set a budget at the start of the year, which has a forecast about the impact on our general fund balance at the end of the year. You will notice that our general fund balance increased quite substantially during the year. The reason for that is due to investment returns. So we invest our surplus cash at the start of the year, assuming interest rates would drop quite substantially during the year. that actually have maintained pretty stable, as you saw in the next report, and our surplus cash is generating returns of around 5% and above throughout the year. That combined with having higher balances from delays in our capital program means we've got more cash to invest, generate more income, and pretty much the vast majority of that increase in general fund balance is due to that impact. And that's kind of borne out by the fact that in the appendix to the report is starting on paragraph 135. We set up some of the big variances against budget during the year, and sort of the big one there is around that factor. This, as an end of year report, we also are required to take this report to full council via cabinet to get approval for the transfers to and from our earmarked reserves. We've got our general fund reserve, which is kind of our core balance of funding that we've got just talked about previously in terms of the feedback from Ernst & Young around you can use that to help balance your budget, but you can only use it once. You also can set aside money for specific purposes, specific areas of spend. The two biggest ones, this is table 9 on page 132. The two big ones are the waste vehicles reserve. That is money we are setting aside for the purchase of new vehicles at the start of the new waste contract in May 25, which is helping kind of to manage the cost of that going forward by having that money there to fund those vehicles. And the other one we've got there is what's called the DULUC grants reserve. And this is where we take the money that we get from government in relation to the policy decisions they make in relation to business rates. They will make decisions to freeze multipliers and do all sorts of things to manage the impact on businesses. We get compensation from that. So money from that goes into there because generally the effects of that are felt in different years to when we actually get the money. So we do that to smooth it out. We also put in there any money from pooling gains or surplus gains from business rates during the year. Again, both to act as to protect against any timing impacts, but also to protect against any risk. Over time, we do, when possible, release money back out of that reserve, back in the general fund, and help to balance the budget when we have spare money in there. But that does help kind of to balance the impact of business rates, which is an uncertain funding stream, given the various non-payment and rating appeals that can happen in relation to business rates. All the other amounts in there are fairly low value and relative to those. So that's kind of a broad introduction to the report. Obviously, a lot of detail in there. Have to take any questions on that detail if you've got any.
Thank you very much, Ian. Are there any questions from the committee? Councillor Ward.
Thank you. Yes, Ian. Table 2 on the directorate budget allocations. There's obviously a massive change through the year on the managing directorate. I think from what you just said and piecing together the other tables, that's because of the unexpectedly large income from the investments that come in. Is that the case, or is there something else driving that?
Yeah, whilst my team manage the treasury returns, the actual budget sits as the managing director. So yes, that is the increase in those returns from treasury investments.
Are there any further questions? Councillor Wright Mason.
Yeah, just looking at table 5 on page 129 about corporate financial health indicators. It strikes me that 2/3 of them are red in terms of status. I just wondered if you had any sort of concerns about
that. Yes and no is the answer to that one. So leisure centre management fee, you'll be aware we've got a new contract in place from April this year. So issued last year in terms of various things going on with that with the kind of financials of that contract coming to an end. But going into the new contract, no concerns in relation to the continuation of that. Car parking fees, we've adjusted the budget since then on an ongoing basis. This was kind of we'd set the budget pre-COVID and we haven't kind of formally adjusted it back down to a sort of post-COVID level. We've now adjusted that budget on an ongoing basis down to a lower level. So the budget's now lower and therefore more likely to be achieved going forward. Planning application fees, they do tend to go up and down. There has been kind of big with high interest rates, issues with amounts of kind of the domestic building going on, and therefore lower planning fees coming in for that. But offset by that, we do get the big site planning fees coming into that account as well. So it's a bit of a mix of both, but kind of expecting that hopefully the residential side will improve, and then the big house building ones will also improve as well. So concerned, but not too concerned on that one. And commercial waste, it is a sign that that we have lost some customers there, but kind of supporting information sort of implies that whilst we actually haven't lost customers, we've got to spend less money with us, each customer. So if you look at the information there, we've kind of got the bin numbers are kind of stable, but sort of actually gone up slightly, but they're paying less money with each bins. They've got less big bins or whatever, so therefore less income on them. So a bit of concern there, but it's quite a small variance, that one. So I think we'll see how it goes and see how that sort of trajectory continues.
Council Ward again.
Thank you. Same table. Just to your point then about the small variances. Is there do you have to mark it green, red, just because of whether it's positive, negative, or negative, positive, or is there some materiality threshold we could apply percentages to say actually that's not a material concern because it's tiny?
The approach we've generally taken is that we will do it during the year. We'll mark them as green if we're happy they're going to forecast above income. Amber, we're a bit wary as to whether they'll get to the income target, and red if we know they're not going to meet it. But then year end, there's no amber because it's either met it or hasn't met it. But yeah, I mean, it's reporting for you and cabinet as to what would you think would give a good picture. So yeah, we could apply a tolerance threshold and say it's between 2% or whatever of that number, or a fixed amount of the target number. We could then classify that as amber rather than being red. It's whatever suits both yourselves and cabinet in terms of what's helpful in terms of adding context to the report. Fundamentally, then all the variances here will feed into table 2, the table with all the detailed variances as well anyway. But generally, kind of the pattern gets lost in there because you're updating those forecasts each quarter, whereas it's always comparing back to the start of the year. So you can kind of see that trajectory across the whole year. But yeah, it does mean that, yeah, even though the commercial refuse is only £31,000 down on a target of 1.2 million, it gets a red indicator, even though they quite only missed it by a little bit. So you have to take feedback about what's helpful, basically.
Create and panic. Panic's the wrong word, but yeah.
Thank you very much for that. I suppose going back to the car parking fees in particular, the last couple of years have come up a lot because obviously, as you've mentioned, they've generally come up red because of the baselining there. I think it'll be useful going forward with that getting re-baselined. That'll give us a true measure, I think, going forward. I was just wondering if there's any other areas where, we felt that we need to re-baseline in terms of whether the indicative income levels have either increased or decreased, quite markedly, or whether that's the only one that's really changed from the assumptions that have been made in the last couple of years.
That was the only one that was left. So yeah, everything else now I'm happy is on a reasonable basis as a reliable estimate about where the income should be as a budget. There will be variances across the year because that's the point of budget monitoring throughout the year. But as a robust way of setting the budget, I'm happy with all the others now.
Thank you very much. Any other questions from the committee at all? If not, the recommendations that the Finance, Audit and Risk Committee provide comments and recommend to Cabinet that Cabinet note this report, that Cabinet approves a decrease of £194,000 in the 2023-24 net general fund expenditure as identified in Section 8 to a total of £16.494 million. That Cabinet approves the adjustment to the 2024-25 General Fund budget as identified in Table 4 and paragraph 8.3, a total £634,000 increase in net expenditure that Cabinet recommends to Council. That Cabinet recommends that Council approves the net transfer to earmarked reserves as identified in Table 9 of £2.028 million. Could I please have a proposer? Councillor Ward, thank you. And could I please have a seconder? I think Councillor Wright Mason was just there, slightly quicker. Is there any debate on this item? If not, can we please move to the vote?
Chair, the motion's carried.
Thank you very much. We'll move on now to item 11, Investment Strategy, Capital and Treasury End of Year Review 2023-24. Councillor Ward.
So an interest in this, but more of my registered interests, my employer, which is NatWest, which is one of the companies invested in. So I'll step out of this item.
Brilliant. Thank you much for raising that. And yeah, if you're happy to move back, that'd be brilliant for this item. Thank you. I'll hand over now to Ian Cooper to present.
Thank you, Chair. So this report covers two purposes. One, to monitor the spend on our capital programme. As we discussed at the beginning of the last item, capital is the spend on purchasing and improving assets. And that also links into the amount of surplus cash we have, and therefore the amount we have for investment to generate treasury returns. So on the capital side, for start with Table 2, which is on page 141, and then continues through the next couple of pages as well. That sets out all the movements on the capital programme during the last quarter. As you will see there are a lot of areas where we had forecast spend, but the capital schemes haven't completed by the end of the year, haven't started by the end of the year in some places. And therefore, seeking to move that capital budget into the following year. It is, I guess, slightly annoying that we're kind of this late in the year, we've kind of got some quite big movements overall in terms of schemes that haven't taken place. Obviously, reasons set out in the report for all of those, but we would like to be spending more of our capital money in line with when we said we're going to spend it. So that's the kind of thrust. Pretty much that entire table is all the bits where we haven't quite spent money in time. And therefore, that has meant that we've had more cash to invest during the last quarter than we would have expected, because we've got more cash there. And then Table 3 is where there's been genuine changes in the amount of spend, not just in kind of terms of capital slippage. So that's set out in Table 3, which is on page 147. 8.6 notes that the capital schemes we have completed during the year, the list there, bullet point list there, those that have taken place in the year. And then Table 8.7 sets out how we funded that capital spend. We always look where we can to fund capital from third-party grants contributions, if we can get them, and Section 106 receipts. But where that's not possible, we obviously have to fund it ourselves. And we are still sitting on a balance of capital reserves, which we can still continue to use to fund our capital programme. I will go on about this committee about the fact those reserves are running out, and there is limited scope to replace them. We have some land which will be able to be sold for developments as it's featured in the local plan, and that will generate a bit more capital receipts, but not of the scale of capital receipts been used to in previous years, which initially arose in the stock transfer way back in 2003. So they will come a point within the next year or maybe slightly longer when we need to borrow to fund our capital programme, and with that comes various costs of borrowing in the form of minimum revenue provision and loss of interest in our treasury, and that's sort of set out in paragraph 8.9 of the report. From 8.10 onwards, we move on to our treasury management activity. So that is that investment of our surplus cash, and it sets out in paragraph 8.11 average interest rate earned on all outstanding investments of 5.57%, and the new deals of 5.34%, and that obviously shows you quite a bit of amount from our surplus cash. We have done that by complying fully with our investment strategy, which sets out where we can invest our surplus cash, and the various places that we've invested that are set out in the appendix. We'll just draw your attention to paragraph 8.19, which is where we're proposing to make a change to the investment strategy. We have been offered by our bank, Lloyds Bank, access to a call account, which we can basically sweep money into at the end of each day for short periods, and that pays 5% rather than 2%. There are no fees for sweeping money into that account. We have been doing that anyway, but treating it as an investment in Lloyds Bank, in addition to the current account, which is allowed by the Treasury strategy. But we think a better way of managing that is to basically combine the call account and the call account and the current account under one limit of £5 million, which is the same limit we currently got for the current account. And basically, say we can do whatever we want with that 5 million between those two accounts, and not treat it as a separate investment. That's basically more realistic compared to what we're actually doing with that account, which is basically an extension of our current account, just doing more interest on it, basically. So proposing to council that we do that change to the investment strategy to allow us to do that approach to that, which is actually probably lower risk than what we're doing at the moment. Both very, very low risk, but slightly low risk to do it this way, than having it as a separate investment, which means we could have an investment with Lloyds in our call account plus £5 million in our current account. So actually kind of sort of manages that exposure a bit differently. So because that's going to council, sort of asking sort of your views, I guess, as the custodians of the Treasury strategy and kind of the monitoring of it, any views on that in relation to that one as it is a change. I will then stop there because I've gone to the end of the report and seek any questions.
Thank you very much, Ian. Are there any questions from the committee on the report? On that last point, Ian, that you raised, I know that obviously there is generally a measure of risk that you measure for all the investments, and none of them are exactly high. Do we have a rough measure for that particular investment type of a similar sort that we have the other investments, or is it just so low that it's kind of assumed to be tending towards zero?
I mean, it's an investment with Lloyds still. It's the same risk having it in the call account versus the current account. If you're an individual, you're protected by having balances in current accounts. That doesn't apply to local authorities. But we are talking very, very low risks. If you look at the appendix for the Treasury management on there, you've got the risk of default percentages in there and the expected credit loss, which is on page, just going to find it in the pack. 1 second. It is on page 171 of the reports pack. For each of the investments, you've got the risk of default, and that's basically linked to how long the investment is for and the credit rating, and all those are phenomenally low in terms of risk of default being at less than 0.1%. In fact, certainly less than 0.1% in all cases.
Are there any further questions or comments at all from the committee? I think the only thing I'd add then, I think on that basis, in terms of the opportunity that's been provided, I think given the fact it's the same bank we're using anyway, I don't think it feels like it's an opportunity really to pass up on, especially given the interest rate that's been offered and the nature of the account that's been provided. Obviously, I probably want to try for a bit, see how it goes, and if it continues on, then it feels like a fairly safe investment, really. I don't know if there's anything else to add on that, or if you're looking for any further confirmation from the committee at all, or if you're happy that that's enough to, I suppose, go for tacit agreement.
No, that's certainly our view, is that it is an opportunity to earn more interest and therefore a little bit more money for the council at that no change in risk.
If there's no further questions, then the recommendations are that the Finance, Audit and Risk Committee provide comments and recommend to Cabinet that Cabinet notes expenditure of £2.409 million in 2023-24 on the capital programme, paragraph 8.3 refers. That Cabinet approves the adjustments to the capital programme for 2024-25 as a result of the revised timetable of schemes detailed in Table 2, increasing the estimated spend by £2.655 million and £0.193 million in 2025-26. That Cabinet notes the position of the availability of capital resources as detailed in Table 4, paragraph 8.7, and the requirement to keep the capital programme under review for affordability. That Cabinet approves the application of £1.313 million of capital receipts / set aside towards the 2023-24 capital programme, paragraph 8.7 refers. Cabinet is asked to note the position of Treasury management activity as at the end of March 2024. Cabinet is asked to recommend this report to Council and ask Council to: number 1, approve the actual 2023-24 prudential and Treasury indicators. Number 2, note the annual Treasury reports for 2023-24. Number 3, approve a change to the investment strategy, allowing investments to be placed on Lloyd's call account, so the combined total of current account and call account is up to £5 million. Can I have a proposer? Councillor Poopler-Singham, thank you. And a seconder. Councillor Willoughby, thank you very much. Is there any debate from the committee? If not, can we please move to the vote?
Chair, that motion's carried.
Thank you very much. Just to check, given we've been going for a little while now and there's still a little bit further to go, would anyone require a comfort break at this time, or would the committee rather we carried on with business? Very happy to take anything from anyone. Quick break? Okay, if we could have a quick 5-minute break and return at 20, well, call it 9 o'clock, probably easier. Thank you, everyone. We'll move on now to item 13, which is the annual report on risk management governance. I'll hand over to Ian Cooper to present.
Thank you, Chair. So during the year, you get two reports on risk management. You get the end of year report, which is this one, and a mid-year report. Both of them are, you get them because risk is an important part of governance, and the management of risk is really important in relation to governance. So the report tries to give you an oversight of how risk management is operating in the council, and therefore runs through the various facets that make up that. The report starts off by setting out that we have a risk management framework. It's available on our website. That's details how you manage risk. It then sort of goes through the various processes around risk and describes what we've been doing over the past year to hope to give assurance around that they're working effectively. So we start off with the risk management framework likelihood and impact matrix, paragraph 8.24 on page 190, and then how that's then used to populate our corporate risks in paragraph 8.25, and just highlight that our risks are linked to generally the priorities in our council delivery plan and the risk of not achieving those priorities. But we also have 3 overarching risks. So some overarching risks sit above that. They are financial sustainability, making sure we can balance our budget and can afford to keep running, basically. Resourcing in terms of our staff and the recruitment and retention difficulties we face for many reasons, partly because we work in the public sector and in certain roles, the private sector is more attractive in terms of wages they can offer, and therefore a constant battle to try and find people who want to work for the council. And then another risk around cyber, a big risk that all organisations face. Many stories in the news about various organisations having cyber attacks, and the risk there is that if a cyber attack is successful, it could significantly affect the operations of the council. So that's therefore kind of key risk that's kind of overarching in terms of if any of those things go wrong, the chance of delivering the projects in the council delivery plan are therefore significantly diminished. Below corporate risk, we also have service risks, and there are some key risks described in paragraph 8.2.6. The section starting on 8.3 describes how risks are reviewed. There's no point identifying a risk unless you do something with it. So the idea of that is to make sure that risks have mitigations in place, things we can do to try and address those risks, and those are acted upon, and then the scores of those risks are constantly reviewed to make sure that we're doing something about them. It's important that our risks are kind of kept under review in terms of new and old risks. So new risks should come on board, old risks should go away. So that kind of it's a live document and not a static one. And then paragraph 8.5.3 talks about some horizon scanning, which is a senior management group during the year. This is basically trying to look for risks that aren't here yet, but maybe in the future. So important sort of bit of work to do on a semi-regular basis, just kind of keep an eye on those and make sure that we're kind of horizon scanning to look out for new risks and also opportunities as well, because they're quite key in terms of risk management. The rest of the report, starting from page 194 onwards, talks about some of the activities we do at linked to risk. Insurance is obviously a way of, I guess, managing risk, insuring against risk. So there's a bit there about insurance and the actions we have in place to manage insurance. Business continuity is key in terms of if something does go wrong in a business continuity perspective, how it can continue to operate and get back to normal as quickly as possible. So make sure we've got processes in place in relation to that. And then health and safety is also about risk management in terms of keeping people safe, obviously reduces risk to them and therefore reduces risk to us. So therefore improves our potential for achieving our outcomes after we keep our staff healthy and safe. And then in paragraph 12 and paragraph 13, we've got the action planning. So action plans from last year and what we've done in relation to that to make sure we kind of have done the actions in relation to that, and then setting some actions in section 13 for the coming year to improve and maintain our approach to risk management. That's a brief run through of the report and all it contains. Have to take any questions on the detail contained therein.
Thank you, Ian. Are there any questions from the committee? Councillor Wright Mason.
Possibly a slightly silly question. This is on the new risks on page 209. Looking at the Baldock Industrial Estate fire, is that just a risk of that fire happening again on that specific area?
It was the risk associated with the fire itself. So it wasn't the risk of a fire happening, because that happened by the time we recognised it on the risk register. But it was what coming out of that fire having happened, the risk that they're then for transpired in relation to that recovery work. So things about the recovery not happening at a sensible amount of time, risk of costs ending up on the council because of action we taken, that therefore we couldn't get reimbursed for that action, for that work we sort of had to put in place to make sure it's safe. So those kind of risks that came out of it actually happening. There obviously is risk. There could be fires in the district and fires in sort of key things like industrial areas. But it's a case of in the risk register trying to recognise those risks that are foreseeable, but sort of have some degree of likelihood of happening. Yes, there could be a fire somewhere, but it's so remote in any individual place that it's kind of not on the risk register. But once it's happened, it's that kind of ongoing risk around the actions therefore taking place afterwards.
Thank you. Councillor Pupula-Singham.
Thank you for that. Just in relation to 8.53, highlighting risks from the horizon scanning that the senior management group undertook. I'm just curious about points on policy direction, post-Brexit legislation. Is there a planning in place there to have a look at what those particular risks might be? There was an example of environmental health, but is there planning in place, and was there any more specifics highlighted there that might be a risk coming online in the next short to medium term?
Not my area of expertise, I'm afraid. But yes, it was certainly identified that there could still be more legislation coming out of that, because I think there's still some legislation due to kind of completely separate from the previous kind of EU legislation in that area. But I don't know any more detail on that. I can provide that to you if you want more detail around that risk.
Councillor Ward.
Oh, thank you. It's a question about the matrix on 8.2.5, which I understand. The risk frameworks I've seen before tend to distinguish between the inherent risk of something happening versus the residual risk once management action's been taken to try and mitigate it, if it's possible to do so. It's just a question of which is this showing, and would it be a suggestion going forwards that we actually could see the difference between those two things, where there is a difference, so as we've done something to reduce the risk?
Yeah, that's the current risk score. So that will be influenced by any mitigation action that's already been taken. In the detailed risk assessments, they would be both the initial risk and the current risk, and also the target risk. So yes, in future reports on this, we can provide that information, probably as an appendix, to provide a bit more context around the direction of travel and where we want to get to with those risks.
What action's been taken and how much it's mitigating those things? Thank you.
Thank you. Are there any other questions from the committee? If not, the recommendation is that Finance, Audit and Risk Committee note and provide comments to Cabinet on this report for referral on to full council. Can I have a proposer, please? Councillor Ward, thank you. And seconder. Councillor Pupula-Singham, thank you. You beat Daniel Wright Mason this time. Is there any debate? If not, can we please move to the vote?
Chair, the motion's carried.
Thank you. So now move on to item 14, exclusion of the press and public. I propose that under section 100A of the Local Government Act 1972, the press and public be excluded from the meeting on the grounds that the following report will involve the likely disclosure of exempt information as defined in paragraph 3 of part 1 of schedule 12A of the said act as amended. Can I have a seconder, please? You, Councillor Pupler-Singham. Could we please move to the vote?
Chair, the motion's carried.
Thank you very much. Just a brief pause now. We're moving into the private view. Is it picking the room up? There we go. Yeah. Brilliant. Okay. I think we're definitely back in the public session now, are we? Okay, good. All right. So item 16, leisure investment options, part 1. I'll hand over to Councillor Ian Albert to present.
Cheers. Thanks, Chair, and obviously to present this this paper this evening. And perhaps first of all, just to there has been a significant amount of work in actually getting us to this stage, and I'd particularly like to thank Sarah Kingsley, our service director, and her team, and obviously Ian Cooper and his team for all the work we have got. And there's been a massive effort in quite short turnaround times to actually get us to this point. So thanks to them and all the staff involved. I mean, as a reminder for colleagues, in February 2024, the council was advised that its application to the public sector decarbonisation scheme for a project to enable substantial decarbonisation of the leisure centres in Hitchin, Royston and Letchworth had been successful. The council was awarded over £7.7 million in grant funding for measures including air source heat pumps, solar PV, and the substantial improvements to the fabrics of the buildings. And I think that was great news. And I think that opportunity of being able to actually make that significant contribution to our net zero policies, here through with the help of our funding and this government grant, it was, I think, very much welcomed. The addition, as I say, the council had agreed funding of 3.06 million to fund our match contribution for the grant and additional project costs such as the preliminary works. Emissions from the leisure centres account for 45% of the council's own emissions. As identified at paragraph 8.1, the carbon savings for the project are significant, reducing the emissions at each leisure centre by over 60%. Replacing gas heating at the leisure centres with low carbon alternatives is the single most effective action we can take towards meeting our target of being carbon neutral for our operations by 2030. Now, on confirmation of the grant award, we commissioned Wilmot Dixon to carry out detailed feasibility studies for the works. During feasibility, some technical issues were identified, paragraph 8.6, which have led to cost increases. A further issue was also identified regarding the termination of the gas combined heat and power units, CHPs, at Hitchin and at Letchworth, and you can see that set out in paragraph 8.10. Alongside the feasibility for the decarbonisation works, Wilmot Dixon also carried out a feasibility for a gym extension at Royston and a learner pool at Royston. There have been cost increases for those projects, also see paragraph 8.15, primarily due to ensuring that they are built to net zero carbon standards. Now, the report to Cabinet therefore lists recommendations, 2.1, 2.2 regarding the termination of the gas CHP units and increases in the project costs at 2.4 to 2.6, which will enable the decarbonisation project and the gym extension to proceed. There is a clear and positive business case for that gym extension. There are strict conditions on the Salix grant, including a requirement for all funds to be spent in the relevant year of the project. And these are short turnaround times. Our allocation is in year one is £6.165,264, and in year two, £1.577 and £960 in 25-26. The funding is front-loaded to ensure the heat pumps and PV panels can be ordered in good time in case of any supply chain delays. There's no flexibility to transfer funding from one year to another, and as such, this is why a cabinet decision is needed at this juncture, prior to the council signing a pre-construction service agreement with Wilmot Dixon. The project programme factors in a decision being made by full council on 11th of July for the approval of the additional budget. in order to meet deadlines, including carrying out detailed design, obtaining planning approvals, and ordering materials prior to work starting on site. The project costs also identify the need to bring in some external expertise in relation to a quantity surveyor. This is very much in line with lessons learned on previous projects, and we hope that the work done by this person will at least partly pay for itself by helping to drive down costs and keep the programme on track. Now, due to the factors identified in the Part 2 report, the recommendation on the learner pool at 2.3 is not to proceed at this stage. But whilst obviously very much wanted to keep this in view to see as whether circumstances changed. I think it's right, whilst obviously not directly relevant to your discussions this evening of finance, to just obviously to be clear what overview and scrutiny are recommended and decided last night. They agreed all of the recommendations, but made a change at 2.3 and also added an additional 2.4. The 2.3 would now read that Cabinet does not approve the business case for Royston Leisure Centre learner pool at this time, due to matters identified in the Part 2 report. So it's a shorter sentence. So not approving the business case for the pool at this time due to the matters identified in the Part 2 report. But they went on to say in a new paragraph that the project board keeps the business case under review, and meaningful and legitimate work to explore all funding options is undertaken for the Royston learner pool, and that's obviously what is the recommendation to full council. So I think where we are, colleagues, and I'll see if Sarah Kingsley wants to add anything further when I've finished in a moment. In overall terms, can we afford the kind of key parts of this project around the decarbonisation and the gym extension? Yes, we can, clearly. But obviously, and as Ian has mentioned in his earlier remarks, that obviously if we do these things, it will need for us to look carefully at our capital programme going forward. And as Ian obviously mentioned in some detail last night, some of these things will eventually mean that we do actually look to internally borrow, which would mean a loss of some of our investment income, and obviously having to set that minimum revenue provision into our revenue accounts, and obviously that means increased savings that we have to find in the future, and we know that as a council. The learner pool is genuinely difficult. I think we all know the sort of things that we want to do here. It says we passed a recent policy on the health impacts of this, and the importance of obviously of children learning to swim. Not that there isn't facility at Royston for children to learn to swim, but it would be even better if we had that learner pool. Obviously, it goes without saying. But there are choices there, and as you've seen in the papers here, that there isn't at the moment a business case that financially stacks up, and that's I think obviously is the choices for Cabinet and for council, and clearly that scrutiny looked at last night. So I'll conclude there, colleagues. I don't know if Sarah, if there's anything, with your permission, Sarah, if any you want to add at this stage, but obviously we can then open it up for any questions. Thanks, Chair.
Thank you, Councillor Albert. Sorry, Sarah, did you have anything to add at this point?
Thank you. No, not at this point, but I'm happy to answer any questions. Thanks.
Thank you. In which case, we'll open up to the committee if there are any questions. Quickly there. Councillor Pupler-Sigham.
Thanks, Chair. Thanks, Ian, for outlining the report. and I appreciate the points you're making there about the work that's gone into this already. I'm just curious about a couple of things here. It says here that, if we don't do this, if we don't make use of the grant funding that has been allocated, which is a substantial amount, then there's going to be a cost to us later on anyway. What is the current life cycle for these gas boilers? Because it says they're at end of life, but is that today? With this now, is this years? Are we talking about?
That's it. But Sarah,
if you know as well.
I can probably answer if you'd like me to, Chair.
Yep, please.
So there's a definition of end of life that Salix use, which is that the gas boilers are over 10 years. However, all of the boilers at North Herts Leisure Centre, at Hitchin and at Royston are much older than 10 years. They were all in the capital programme to be replaced anyway. Ian might be able to correct me if I'm wrong, but I believe Hitchin and North Herts were in actually for this financial year. Royston was in for 27-28. So they are definitely reaching the end of their useful life. But as I said, the Salix have an actual definition of 10 years.
Thank you very much, Sarah. Does that answer the question there?
Okay. Yeah. So yes, no, thank you, Sarah. Because it strikes me this termination cost for the CHP and is, it's not insignificant by any means, and it's whether or not it's fine. I understood the point he was making. We can afford it now, but as the report makes clear, there are going to be long-term implications, and what we, as I understand it, we need to consider is whether or not doing this now, although potentially viable, is going to bring new questions to us, perhaps 12 months from now, as to future viability for other things that we might want to be doing. It's more just a comment there.
Councillor Ward.
Thank you. Just so I've understood this from this committee's perspective, it sounds to me like if we don't go ahead with this, we're going to impose on ourselves a significant financial risk, because we'll have to come up with funding to cover the gap for the grant that we won't have access to anymore. And unless we're prepared to sacrifice our climate emergency and goals to 2030, we're going to have to fund it, and we're going to have to do something anyway about it. So is that a fair assessment? Okay,
that's a nod from Councillor Albert there.
Yeah, thank you. Yeah, thank you.
Yeah, just yeah. I think that's a fairly concise summation there of the choice in front of us tonight. John Cannon.
Thanks. Just on a similar vein, following the train of thought, is there anything that can be done around the timing of this to either reduce the penalty charges for Centrica? Is there a taper towards this 2035 penalty clause? And indeed, for how long is the grant on the table, please? Is it just this financial year? Is that forcing our hand in the timing?
Would you like me to answer that, Chair?
If you're happy to take it, Sarah.
Yeah, sure. So in terms of the grant, it is time limited. So we have to spend the grant by March 26. And actually the vast majority of it we have to spend in this financial year for the reasons which Councillor Albert outlined, in terms of having to order the heat pumps and the PV panels in this financial year. In terms of the CHP agreements, it was originally intended that we would keep the CHPs as backup to the air source heat pumps, so as an emergency backup. But unfortunately, the terms of the agreement with Centrica require us to operate those CHPs for 19 hours a day. And if we don't, then we basically breach the agreement. And we can't do that and meet the terms of the Salix grant, because the primary source of heating has to be low carbon heating. Whereas if we had obviously had the gas CHP still running for 19 hours a day, it would mean that gas was still primary. So we would lose the grant essentially if we keep the CHPs running. So there is a taper, to answer your original question, there is a taper. So it does taper each year, the cost. And it's likely that that cost that we actually end up paying, if Cabinet agree, it will be slightly less than the 757,000. And that's because actually the air source heat pumps won't be installed by March 2025. It will be later than that, but it won't be significantly less than the 757,000.
Thank you, Sarah. John, is that a follow-up you'd like to ask? Thank you much. Councillor Buber-Singham.
So this, again, it's probably just more clarification for myself than anything else. But as I understand it, the climate emergency is declared in 2019. But this agreement for the CHP provision over 15 years was agreed in 2020. So again, maybe no one here can answer that, but what was the thought process there that we lock in the provision of gas boilers for that amount of time, in recognition also that just from the answers we got that these boilers were going to have to be replaced long before that 15-year period was coming up potentially, and was that I'm sure the thought process, some of it might have been that it was going to be a cost benefit, but now it's going to be a cost, I don't want to say disaster, but it looks pretty bad. No?
I could probably answer that one, Chair, as well, if that's okay.
Please do.
So actually this, not that I'm trying to deny responsibility, but this was before my time as service director when the CHP agreements were agreed. However, my understanding is that we had CHPs prior to this particular agreement, so they were already in place. This is a new agreement, and I think, to be honest, the answer is that the 15-year term for the agreements is pretty standard for these sorts of agreements. So there's all sorts of these agreements across the public sector, and they're all really long term, because obviously from Centrica's point of view, or whoever is supplying the gas CHPs, they've outlaid quite a lot of capital, and I guess the longer the agreement, the cheaper rate we get. But I'm sure that they are pretty standard at that length. But I completely take your point about having declared a climate emergency. However, I think it's probably reasonable also to assume that in 2020, the technology for air source heat pumps in leisure centres, I suspect there probably weren't any that were being used on that scale in leisure centres. So I can only assume that that was also a reason why we entered into a new agreement, was because the technology, and also probably the prohibitive costs, I would imagine, of looking at alternative technologies at that point in time.
Thank you.
Thank you, Sarah. Councillor Ward.
Thank you. I'll conveniently leave the carbon impact question of my question coming up to other committees, but from a purely financial point of view, is it possible to still, rather than terminate the CHPs, could we use them, given they produce power, to generate power and export it and sell it and claim the revenue stream back, just to mitigate the financial impact? Albeit it would still be creating carbon, which is probably a bad idea, but from a climate point of view. But I don't know if that's possible with the contracts or not.
Chair, I can probably answer, but I don't believe we can do that under the current contract. No. Also, the CHPs don't actually belong to the council, so they are ultimately Centrica's asset. So we can only use them under the terms of the agreement.
Thank you again. Sorry, Ian.
I think it's also worth saying that even if we could, the export prices for electricity are far less than what you import it at. So actually, you probably make a net loss anyway, even if you could do all that, because you're generating at a certain cost of electricity, but actually to sell it back to the grid is much less than that, because the differential between the import and export price on electricity.
Are there any further questions at all from the committee? If not, then I think before I read out the recommendations, I just want to check with Councillor Albert. Was the intention that we would align our recommendations with those passed by ONS last night, or is it just on the basis that the recommendations have been put forward in the papers, we would use those?
So my view would be that you are consider, but I mean, I'll allow maybe our committee services colleagues to have a view, but my view is that you are considering this on the basis of the paper that's in front of you. Should you choose to take the same decisions, then that's obviously your choice. Do you wish to take a different decision? Then that's fine. But no, it's not, certainly not my suggestion that you should do that. And obviously, as Ian was saying earlier on, there are different functions here between the scrutiny committee and the finance committee. But I mean, obviously, if our committee services colleagues have a different view, please say.
No, I think that's fine. I just wanted to check on that before we went ahead. I suspect that I might want to say something of that, but that will come in the debate afterwards. So if there are no further questions at all, the recommendations are that the Finance, Audit and Risk Committee recommend to Cabinet that Cabinet agree in principle to terminate the combined heat and power Centrica contracts at North Harts Leisure Centre and Hitchin Swimming and Fitness Centre at the appropriate time during the PSDS project, and recommend to Council as per 2.6 below regarding the termination fee. That Cabinet expresses its profound disappointment at the position taken by Centrica over the cost of the CHP contract termination, given the company's stated position as energising a greener, fairer future, and requests that the Council continues to raise and seek solutions to the issue of long-term inflexible agreements for gas CHPs with Salix and government, which will inevitably prevent many public sector organisations from achieving their net zero ambitions. That Cabinet does not approve the business case for Royston Leisure Centre learner pool, and the Cabinet budget is removed from the capital programme due to the matters identified in the Part 2 report. That Cabinet recommends to Council an increase in capital expenditure of £2.4 million into the capital programme for the decarbonisation work to the 3 leisure centres. The overall budget will be profiled across 2024-25 and 2025-26. An increase in the capital budget of £250,000 for the Royston Leisure Centre gym extension to ensure the extension is built to net zero carbon standards. Approval of revenue expenditure of up to £757,000 for termination and removal fees of the gas CHPs at North Harts Leisure Centre and Hitchin Fitness and Swimming Centre. This would be funded from general fund reserves. Can I have a proposer? Councillor Wilby, thank you. And can I have a seconder, please? Councillor Wright Mason, was that a... Yeah, okay, good, thank you. We'll move on to debate. Is there any debate from the committee on the item as discussed in part 1? Councillor Ward.
Thank you. Can I just ask a procedural question? So if we agree what you just read out, which is different to the what I've reviewed in scrutiny modified, how does that work? Does that then both go to Cabinet to decide? Is that the...
Yes. So it essentially we'll be presenting our view as committee to Cabinet. It will then be on them to make a decision. So at the current time, from my understanding of what went through ONS, the main difference in recommendations is that currently we are recommending that the learner pool piece of work is removed entirely from the future work stream. Whereas I think the ONS version asks it to be kept within consideration for a potential future date. I don't know if that's the correct reading of that.
I think both versions of the report, both what is in front of you and what CAB and ONS, both of them say that we'll continue to look at the option of the learner pool at Royston Leisure Centre. The difference is the inclusion or exclusion from the capital programme. That is a difference being made. The report sets out the reason for taking out the capital programme. If you're not proceeding at this stage, it's not a capital plan you've got in place. So it's in the capital programme. It comes with a cost in terms of revenue because you're leaving that in there, and therefore you're assuming you spend money, and therefore you have to charge minimum revenue provision and assume a loss of interest in revenue budget. That was the reason for the proposal to take it out of the capital programme. Obviously, ONS wanted greater focus and greater expectation that might continue in the future, and therefore just leave it in the capital programme.
Councillor Ward, are you happy with that? Thanks. That's good. Okay, Councillor Publisingham.
Thanks, Chair. I was just wondering if committee is minded at all to make any additions to those recommendations, just bearing in mind, if we can as well, or change some of the wording, just bearing in mind the point I alluded to earlier, just significant, I'm sure like everyone, significant reservations about this termination cost, and just bearing in mind the report and the financial implications. As we heard earlier on this evening, this authority is in a good place presently and due to the decisions that have been taken. But by approving this in due course, we are potentially opening up question marks about whether or not that will be the case going forward. And then particularly the bit that's here about the need that this will engender to make savings elsewhere at a future date, but as yet undetermined, when we know the situation with council budgets generally. I don't know if there's something there that we want to highlight overall.
Do you
more like future risk?
I suppose it's quite as a question. Do you have a specific amendment you'd like to make to the recommendations,
No.
or is it something you'd like to see if we can include a consideration within the recommendations?
Potentially something to be workshopped and added into.
So a little thinking about that. I'll take a couple of the points, but if we keep that in mind as we go through, we might come back to that and potentially move across to Councillor Albert and Ian Cooper just to maybe get some understanding from them on that. But if we'll keep bear that in mind the next few minutes. Just take points from a couple of other councillors first. Councillor Wright Mason.
Yeah, it's sort of been covered already, but obviously overviewing scrutiny was yesterday, and we had a very long, I think very robust debate about this. And so my view is that I think the financial implications of the recommendations, I think I would be happy to accept as they are. I think it will cost us more money in the long term not to go through with it in terms of the decarbonisation. And I think although the learner pool situation is unfortunate, I think the financial arguments laid out sort of make sense. And I think that was the view of overall scrutiny. So personally, I would be happy to take them as they are.
Thank you, Councillor Wright Mason, for that. John Cannon.
Thank you. Thank you. Yeah, just on that point about the phrasing of the recommendations and whether some words can be found, to take it in a slightly different direction. The new power supply, the generators are going to have to be bought from somewhere. Is there something we could do with our wording around the negotiations of price for these new appliances, particularly if sourced from Centrica? Is there an opportunity to get better value for money at the negotiation stage for the new appliances, given that our financial situation is rather locked at the moment? Can we get better benefit in time at the point of procurement?
Yeah.
Chair, would it be possible for me to respond to that?
Sarah, go for it. Yep.
Sorry, I just wanted to make the point that actually we have attempted those specific negotiations with Centrica. So we did have conversations with Centrica about whether they might be willing to supply the air source heat pumps and the solar PV, essentially in exchange for a better deal on the termination fee for the CHPs. And it's fair to say they did engage in those conversations initially, but then ultimately they took a commercial view on it. They did give us a price for air source heat pumps and solar PV, but we have been advised by Wilmot Dixon that they can get more competitive prices than the ones that we were offered by Centrica. So there was literally no benefit to us in engaging with Centrica any further because they made it clear that they weren't willing to budge on the termination costs.
Thank you, Sarah. John, is there anything else you want to add on that, or does that cover the point?
Thank you.
Okay, no worries. I think going back to the point raised around the termination cost, I suppose again I'm trying to think of the ways we could, because obviously if we do go ahead with this recommendation, I think as it would appear that so far the comments suggest committee would be minded to. Obviously that would then bring about, because of the timescales required, the need to, for want of a better term, kind of swallow that cost as part of the process. I suppose then it's maybe what we can do around, I mean, I maybe this is something to go back to Ian Cooper with about the, risk management on that side, the mitigations against it, whether there is anything that could be considered or could be worked on there that could possibly change the situation.
I don't think we need to change the situation. I think the decision is as in front of you. Obviously, we'll continue to work for the costs as we progress forward with Wilmot Dixon if the decision from council is to proceed with this. Obviously, in presenting the report to Cabinet, you'll have your chance, say, Chair, to present that. And maybe as part of that presentation, you can highlight some of the concerns that have been raised rather than having to come up with recommendations in that regard. So you can recommend the recommendations go forward as they are, but with the concerns highlighted in that kind of cover presentation.
I don't know if there's any, so if you want to, is there any other thoughts you've had in the time as to how we could present it? If there's anything you want to add to the recommendations, because again, you're very welcome to make a propose an amendment to those.
Yeah, not off the top of my head.
Yeah, I think again, I mean, my own thoughts on this. Obviously, kind of echoing Councillor Wright Mason. There are clearly some negatives that are coming out of the process, especially with the timescales involved. There are, I think, potentially unavoidable costs that we may have to look at here. But I suppose that the question really comes back to then, given the money that has been received, that is going to be received to use for the projects, whether the opportunity comes round again. We're talking about an amount of money that's over half our annual income, in one lump sum to undertake this project. It's an incredibly substantial amount of money. I think clearly the termination fee again is in itself a significant amount in context again of our own budget and the spend elsewhere. But given the expected savings, and I think although it's not exactly the remit of this committee, the fact that we are then fulfilling part of the council's own longer term goals about decarbonisation, my personal feeling on this, whether or not it's right as chair to be particularly bringing this up, is that the trade-offs feel in favour rather than against the recommendation as it's presented. Again, obviously there is the issue around the learner pool as well. Again, we want the facilities as much as possible for our residents, and we want them to have them available everywhere as far as possible. But to add, I suppose, another line in the against column in terms of our finances, and given the risk going forward, it's another saving has to be made elsewhere. So as much as it's not the nicest decision. I suspect that the financial elements probably point us in the direction of agreeing with the recommendations as presented. Again, I'm happy to take, and if there is any amendments that the committee would like to make, if there is any particular strong feelings, please do put them forward. That's within our gift to do in terms of recommendations we put forward to cabinet. I think personally I'm comfortable, given the discussions and given the information provided, with what would be going within these recommendations. But again, if there are any further views from the committee, very welcome to put them forward now. If not, I think the conclusion there is to leave the recommendations as they are written. We've had a proposer and a seconder, so if there's no further debate, then could we please move to the vote?
Chair, the motion is carried.
Thank you very much. We move on to the final agenda on the item, which is possible agenda items for future meetings. So for the committee, this is a regular item that we have on. Tonight, obviously, has been pretty full in terms of items on the agenda. Not quite usually this many, so hopefully it doesn't put you off in future. What we do ask for, though, if there are any views from the committee in terms of other items you'd like to see, whether it's particular areas of the risks carried of some of the financial items, anything in which you'd like to potentially get service directors along, maybe for views on some of their service areas, and the sort of financial risk and audit elements that fall within their remits. This being the first one for everyone attending, obviously not expecting anyone to come up with anything just yet, but again, it's an item we have every time, and anything that anyone's put forward will be considered. We've had a couple of suggestions in the past, but if there is anything the committee would like to look at in more detail, obviously with presentations and potential chance for questions, then please do put it forward. If you have anything now, that'd be great. If not, don't worry too much. Whether at the next meeting or any time, if you want to get in contact with myself and Ian, then please feel free to. If not, oh, sorry, it's just popped up. Yeah, Councillor Ward. Ian, I don't know if you've got anything you can add on that at the moment.
We'll certainly have the mid-year review on risk, and happy to, when we do that, to definitely do that as part of that. And I'll look at whether we want to bring something to an earlier meeting before that. That would usually be in the December committee, but we can look at September as potential to do some of that there as well. So leave it with me and I'll see what we can fit in September. The aim is usually to have a lot shorter meetings than this one. So don't add too much to the agenda for September meeting, but we'll see what kind of fits in nicely with that.
Thank you, Ian. And thank you, Councillor Ward, for the suggestion there. I think then, if there's nothing else on that, that is the final item on the agenda. The next meeting of the committee is Wednesday, the 4th of September. The time is 22 minutes past 10, and I'll close the meeting there. Thank you all for attending.